Hello, Trade Pros. Hello, YouTube. It's Victor from Trade Pro Academy, and today we've got yet another crazy video for you guys. In today's video, we're back in front of the computer. We're back looking at the markets, day trading. And today, what I'm going to be talking to you about is my number one trend trading secret. And that trend trading secret reveals how I identify a trend break with higher probability than maybe something you've seen in the past. Now, this technique can be applied to any day trading asset, whatever it may be. But also, what you guys should know is that you'll have to be a lot more patient for this trend break. So this may be a little more for those lax day traders or those swing traders that do have a lot more patience. But what this does is increase the probability that you can identify and scope out a trend break. So that is coming up right after this intro. So I want you guys to smash that like button, hit that subscribe button, and comment down below. What do you guys enjoy about these videos? What do you guys want to see more of? So let's go ahead and get started. So in this video, we are going to be talking about identifying a turning point in the trend, how the trend breaks. It's going to be a shorter video, but I'll help you understand it very simply and the best I can. So this trend break, this number one trend trading secret that I will reveal to you guys is what I call a double impulse break. Some people might have a different name for it. Some people may use the same name, but it doesn't matter. What you're doing is looking for two impulses in the direction of the current trend to break. So first of all, what is an impulse? Now, what you could do is look at any other market. It doesn't have to be the futures market. It could be the futures market, any day trading market, any time frame, whatever it is. Try this out. Swing traders, day traders, this is a tool that I like to use no matter in what market I'm using, even if I'm looking for investment opportunities, options opportunities, day trading futures opportunities, I'll still use this tool to identify where the trend may break. We have to talk about what impulses are. So if I draw it super basically and easily for you guys to understand before we go into the market and identify some of those opportunities, it is the starting point at which the market manages to print a new high or a new low. So in a bull market, if this is what the bull market looks like, this is the point, this is a point at which you start the creation of a new high, right? At this point, you start the move into a new high from this high and from this high. So this right here, these two circles that I've done, these are the impulse moves. Now to the downside, if we draw a stupidly simple downward trend, what you see right here is lower lows, lower highs, right? The impulse on a down move is the point at which you start a move to break a new low. So if this is the low right here, from this first circle, you start a move lower to actually break that low. So this becomes the impulse, this becomes the impulse, and this becomes the impulse. Very simple. Now, if we look at a chart, it may be a little more difficult to identify, but we're going to go through that. Now, in a bull trend, in this trend trading secret, you know how a bull trend moves, right? It's higher highs and higher lows. So in order for a bull trend to continue, we're going to have to see higher highs and higher lows. Once this is no longer true, then we will see the reversal of the trend into a bear trend where we could actually start lower lows and lower highs, right? So in order for this to transition into this, what we're going to see in a bull market is actually the two impulse break. So if we have impulse number one, the most recent impulses that we have, and impulse number two, if we line these up, 1 and 2, this trend trading secret involves the break of two impulses to actually turn into a different market trend. So if this is the bull trend and we're continuing to move higher highs, higher lows, once we break the first impulse, some more eager traders may try and look for the short here. But once the second impulse is broken, notice that we are no longer printing higher lows and we are no longer printing higher highs. Instead, we are printing lower lows and lower highs. This is the point at which you can find a high probability trade to actually look for the reverse of the trend. So a bull market transitions from higher highs to higher lows to lower lows and lower highs if we break the first two most recent impulses. No matter the time frame, no matter the chart that you use, this is a technique that I like to use to confirm that downside press. Now, the bear market. So the bear market, we talked about lower lows and lower highs, right? How does the bear market with lower lows and lower highs transition to a bull market, higher lows and higher highs? It's pretty simple. All we do is use this double impulse break, right? This time to the inverse side. So if we can identify that the bear side trend moves lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? What we've done here is actually identify two impulses, right? So this is the impulse where we created a new low, right? And this is the second impulse that we created a new low. So based on the trend secret that we've identified, we have to break two of these impulses, two most recent impulses, to actually change the trend, which looks something like this, right? And at this point, once you see this blue line, what we've created here, some might call it a different chart pattern, whatever it is, but in market structure, it may not look so clean all the time. That's why I like to call it two impulse break. Once we've identified this and broken those two impulses, we've actually transitioned to that bull side move, right? So this might look like an inverse head and shoulder, whatever it may be to you guys. However, at this point, we have transitioned to the upside. Now, if we take a look at what it looks like in a current market condition, it may not look so clear to everyone. So in this current situation, we have the 10 tick that is present right here. In the most recent example, what we could see is a pretty easily identifiable trend. So the current trend is to the upside here. Overall, it is to the upside as well. And most recently, we can identify where the impulses are, right? So if we identify the impulses as a starting point at which we create new highs in this smaller bull structure, we can see that impulse number one starts here, because what we do is break this prior top from this point right here, right? Impulse number two actually begins somewhere here, down into these levels, right? So this is the S&P 500 10-tick chart, futures chart. The first impulse level is around 31.99, let's call it, and the second is all the way down at 31.91, right? So we've got a pretty big difference between the two, and we'd have to wait some decent amount of time before we actually do break down both the impulses and look for the downside structure and the downward trend. But what that does is confirm the super strong probability that we are transitioning to the downside. Now, if we look at another example that had already happened here, if we identify this bull trend right here, how does this bull trend end, right? If we identify even this impulse right here to start, and this impulse right here to start, or any impulse within this full section, right? Some traders might identify this impulse here, right? But the most recent impulses in this up wave can be identified at areas of stall, which create new highs, right? So I would consider impulse number one here, and then impulse number two would be somewhere in this area, right? Some traders may consider this impulse number two and this impulse number one, which is totally fine as well. However, if we do take these two into consideration right here, we have to identify what the impulses are. If we stretch this along, you can see the first break of the impulse and then the second break of the impulse. And what happens at that point? This becomes a downward trajectory, and what we're seeing is resistance hold out for the continued push to the downside. Now, we didn't really break new lows, lower highs, but what we did do is identify really key support structure, turned resistance, and a flip of the bias for a potential rundown of over 10 points in the S&P 500 market. Now, again, if we're looking at impulses to break, some traders may think it's this, but I would caution everyone to look at the two most recent impulses that the market has printed, which we've done here in this scenario. Now, if we do manage to print a new higher high from here, from this impulse, then this becomes a second impulse, and this becomes the other impulse at this point, meaning that under these 3200s, we will start transitioning to a more downside move. But for the time being, what we see is this the current high, this is the prior peak higher, this is the impulse that brought this new high, and this is the impulse that brought this high. So what that means is under these 90s, we get the transition to the bear side at this point. So what I want you guys to do is try this out. Go to your favorite market, whether you swing trade or day trade it, and use this secret, this double impulse break, to see the change in direction. So this is Victoria from TRADEPRO Academy, and I hope everyone enjoyed this video. Drop a comment down below. What did you think of this? What did you like? What do you want to see more of? And remember, smash that like button and the subscribe button, and we'll see you guys next time.